And good morning, everybody. All right, let's let people get in here. Morning, y'all. All right, getting a couple people in now. Morning, everybody. Thank you for the thumbs up. All right, all right, all right. How we doing out there, internet? You guys hear me? We all good on audio? I'm gonna just blast through the charts. Now I'm looking at hourly charts, and on equities, we got a massive update today. Up about another 4.5% today. Pretty impressive move. And I have a had a malfunction, so I'm not getting live stream data on my futures at the moment, which is no big deal because I'm really only trading Forex and crypto. All right. Good morning, guys. Okay, we did have a failed vol breakout this morning on the Euro Pound. As you can see, for those that got up early enough to trade, failed vol breakout on that. I got a bunch of data to share on what we're looking at these days. That was the nice one on the hourly there. The vol breakout here on the Aussie yen. This morning, pretty powerful move there. That's about 1 hour move, but not bad. Looks like Kiwi yen, same setup. Kiwi franc. So in essence, what we're getting is when we have risk off risk on, when we have a market where the Aussie and Kiwi are running, usually that means we are also running in equities. And so pretty much it's all correlated around there these days. You can see same sort of setup on the S&P. This is like 20-minute delayed. So I just got to reorganize. I got a conversation with with TradingView to get that reset up. But otherwise, no big deal. I'm not really trading futures at all right now. But we had that big power move, and then you get in, which is nice here. We're going to talk about why vol breakout is the move to be trading right now. But you can see your position size now. We got our vol breakout, closed up above. We put a buy stop. And on the second one, we got a nice small candle. So now that's a 1, that's a 2, probably a 3-hour move up from the entry on that trade. So that would have happened last night at, I'm assuming it's so during last night's session. I'm not trading these, but what I want to talk about, let me see if I can find that file. It's over here. So with the mentorship program, we're working on the currently going back and trading the global financial crisis. So let's pull this up on a daily. I think I can do that. Yeah, okay. And you can see on the daily, we are basically in a bear volatile and a bear quiet market. And I've got a bunch of research. If you got the email and you read through the email about a week ago, we were talking about trading in the bear volatile regime, actually trading through the global financial crisis and using a bunch of our work to figure out what's working. So the team has compiled 91 trades from basically the start. So December of 2007, the entire time it traded the S&P 500, it traded the vol breakout exclusively, and it traded only the bear volatile times during the global financial crisis of 2007, 2009. I'm not sure, I may have to do it this way, but probably let's go to So let's see if we can get to, yeah, because of my subscription, it's not going to give me the, it's not going to give me the data I need, but that's no problem. But we can see we're in the bear volatile, bear quiet regime. So right now, also the other thing I want to point out is when we're in bear volatile, that's the dark red. And when we're in the bear quiet, we're in the light red. So the only strategy traded during bear volatile is the short vol breakout trade. So if you're running the SQN, then you know that we have basically, we know what to expect, what sort of strategies to expect. And this is how you trade with a market regime filter. When you have a market regime filter, then you know what's going to work during different times of the market cycle. And so during a bear volatile, which we are currently bouncing in and out of, what works really well, a vol breakout strategy on an hourly chart. Okay, so you can see that starting, it looks like at the beginning of April, we just went sideways and we just consolidated. And we had we sold into the close on, not into the close. We came back to basically nothing on Friday, sold off and kind of bounced a little bit. We had that strong power reversal here. And then on the open Sunday, it pretty much just went. And so you have now we're in if we go to our daily, remember we have to get our daily regime. So at this point, it looks, because it's come back and it's spent a lot of time in here, not just because it's quantitatively displayed on the screen here by saying it's bear quiet, but also we can see the characteristics that this is bear volatile. And then this is a lot more like what happens in a bear quiet regime. So we know we're in a bear quiet. So bear quiet is different than bear volatile. Bear volatile, the only thing we do is we short on the hourly chart for a vol breakout. There's no failed vol breakouts on bear volatile regime. It's just vol breakouts to the downside. If there's not one, you don't take it. Okay. So now we pull up, when we get into a bear quiet regime, then we can start looking at going long. Because what happens in bear volatile, it's just sell, 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 sell. In bear quiet, you're looking to recover. Okay. That's when these bear market rallies, these 5% up moves in a day that rip your face off if you're short, that's when it works. So you're actually looking at buying dips. It's similar to bull quiet in that you're willing to go long. It's just that in bull quiet, you don't go short, where in bear quiet, you're willing to go short a little bit more often. But as we can see here with all these sell-offs, every one of them has been bought. We have hammers left and right. So a pullback in an uptrend, we have a vol breakout, and any hammer in an uptrend is looked to be bought. So that's cool. We know how to trade that stuff. But what about, let's get back to the bear volatile. And let me pull up some of the summary here. So we've got about 100 trades, strictly trading bear volatile regime. Everybody in here understand what we're talking about when we do bear volatiles. Also, thank you for the likes, guys. If you don't mind, hit the like button there. That helps notify people that what we're doing here, and wakes the YouTubes up so that they're willing to promote the room and get into and get in here. Also, if you saw it on the tweet, retweet that, like it, get it out there. Okay, so let's have a look now. So it looks like 91 trades, the win rate was about 61%. So it drops a little bit, of course. And as you can see, as you first start out into the curve, it's going through battles to establish itself on the returns, right? It's going through some battles to deal with the fact that it can't decide if you're in bear volatile or bear quiet, which is where we are right now. If we're in a global financial crisis type 1.5, 2 year long trade, or 2 year long environment, this is expected. Okay. The first part yeah, you have some good instant wins, but then it gets rough because it's, you know, governments are intervening, things are happening. It's a little more challenging than, you know, bear volatile is the toughest market to trade. I will say that. Because you have to take such small positions, and oftentimes you can't even size the positions correctly. Okay, so we had 56 wins, 34 losses, one break even. Woo! Average win 1.2 R, average loss 0.9 R. And understand what I mean by R. R is your risk. So the difference from your entry to your stop price, that's your risk. 61% win rate, 1.3 profit factor. Basically, that's the difference between your average win and average loss. So you're going to make $1.33 for your on average all trades. So, you know, wins and losers. That was a 2-year period. You made 36 R. Your expectancy 0.4. It's a positive expectancy. Now here's the part that's tough. The SQN for the total distribution was 2.86. For the SQN 100 was 2.99. Now that's the lowest. That's the lowest SQN that I trade. Like 3 is about as low as I'm willing to go. And why is that? So if you've noticed that I've spent the month on vacation, I haven't been trading. I've taken 2 trades. I got long. I'll show you. Let's take it on the daily. I got long here on the Kiwi 2 weeks ago, I think it was. And so one thing that's interesting is the SQN doesn't work nearly as well on the currencies. So I don't apply that. It's an equity advantage, and that's because there's a natural tendency for, like, there's government intervention in prices, and there's no motivation for the euro or the pound or the franc or the Kiwi to go higher. Like that's not an incentive. And there's not an incentive. I mean, it's a little bit higher, but you wouldn't be cheering it like Kiwi 2000 to the US dollar. That's a horrible thing. Ask Argentina today. They just, I think they defaulted today. So anyway, I got in on this trade, got out here at about like 1.2 R, took my profits. That was the only trade. And then of course I got long Bitcoin last week. You might've seen the tweet. I got long off the 3-day. Also you can, oh, what was that? Oh, there it is. Okay. I got long off the 3-day, and then more importantly, I got more long off the weekly chart. So it's, we're doing okay on the 3-day chart. We're almost at about 1 hour profit, but let's have a look at the weekly. That's the one that got me full in, took my full position. So here, and so we're slightly in the profit here, averaged in. Okay, let's get back to our statistics. So when I trade a strategy, typically my failed vol breakout and vol breakout strategies, when I trade them, they're typically SQN is near the 5 area, 5 and higher. And what that's saying is basically I'm going to make my win rate's usually higher. So probably up, morning will, win rates get up in the 70s, and I'm going to probably be making about 1.5 R to 1 or 0.9 on my losses. Meaning that if you're winning, if 70% of the time you're taking profits and they're a little bit more than the losers, you're going to have a much better equity curve. You're not going to have these drawdowns in this area here. It's a much smoother trade. So unfortunately, we are not in that regime at the moment. Remember, we are in a, get in here. Sorry, I'm having some audio malfunctions. Make sure. Sure. Okay. All right. What's up, everybody? Showing up now. Good to see you all, as always. We're not going to live stream all day long like we've done in the past. I'm just going to cover a lot of what we've been doing with the people I'm mentoring through the program, and give you some of the results. What we've done, just to update you, is we went back to the global financial crisis, because it's a pretty good analog to what's going on right now, at least in the chart. And we went and we decided to trade the vol breakout, the failed vol breakout, and kind of figure out what works in that environment. And this market, it's funny because this is the most addicting market to most traders, right? When you're having massive volatility like we have today, or this past month or two, and these big, huge moves, it's interesting to see. This is a quantitative, this is, and 12 years on, like this is somebody who I think, so this trader who put this together, he was, I believe, in high school, maybe junior high, during the global financial crisis. So he's heard stories of it. And of course, the old folks are, oh, kid, you don't know anything about global financial crisis. You've never been through it. Well, like I said, you guys all have now. This is something nobody's ever dealt with. Like I said, I've been saying that for weeks. This is something big. But he had no knowledge of what went on, and the suffering and the pain and the drama that people went through during this during the global financial crisis. So he had just been told that it was tough, right? And so went through and he did hourly trades, the vol breakout strategy during the global financial crisis on the S&P 500 futures. And he collected for over a 2-year period. The only thing he did was he went short only, bear volatile, using the vol breakout strategy. That's it, okay, with 1% risk. And it's important because, so basically, I think we started with $1 million balance there. And over the course of 2 years, if you only did that, now this is the thing that's pretty cool, is for a 2-year period, you made 43%, 42% on your money during that 2-year period, while the rest of the world sucked. So if you are going to trade during a bear volatile market, you want to be looking to trade the vol breakout strategy exclusively. And what does that look like? Actually, we'll take a look at, let me go to let's say, so it really became the beginning of March. So let's just go to the beginning of March. Because even though on the SQN it doesn't say, it was extremely obvious to us, all who were in here, that we were in a bear market, bear volatile. 3, 1. Okay, let's see if we can get back to. Okay, so looking at the hourly charts on the 1st of March, we were in a bear volatile regime. So what were we? Once it was known that we don't need that down there because that's an hourly. That we know that we're only going to be trading vol breakouts. So if that's the case, you got short here in February and you rode that, but really wasn't until the monthly turnover that it became extremely obvious that we were in a bear market. And I say that this is down 1.5%. If you remember, we had some pretty crazy days during that time. And so what I'm going to look for is, this looks very familiar to what we're dealing with today, right? So you're literally just going to sit there and do nothing while the market is in complete chaos. We're already up to March 5th. Now we have a vol breakout here. Okay. So vol breakout. notice how horrible the risk reward is. I mean, that's a 1% candle. So you're shorting at 30.17 and your stop is at 30.58. So that's a 40-point range. Right now, that seems like nothing. But at the beginning of March, that was a big, big move. So you get short here. And now I'm not saying this is not what I did, just to be clear. This is what the strategy should be traded during this time frame. And as you can see, we have a lot of volatility. This reversal here, we're still in that mindset of we're doing, buy stops perhaps, because there was a lot of I don't know if this is going to work sort of stuff, right? We were still thinking that we were a month away from bull quiet and bull volatile, so it was still a little hard to be this heavy short. But if you go quantitative and you realize, okay, we are in a bear volatile regime, so the only thing we need to be looking at is selling the vol breakout strategy, because the vol breakout, instead of just selling anything, right, anywhere in here, there's no quantitative edge to just do that, other than you can say, yeah, that's bearish. There's a lot of down bars here. And this one signals, yep, we're still shooting star in a downtrend. We're still going down. So now I want to disclaimer this 100%. I did not trade this. However, what I'm saying is look at what works. Go back in time, quantitate your market regime, bear volatile, what works in a bear volatile market regime. The vol breakout strategy, short only, okay? So let's just take the last month. So that's 1R, that's 2R. Now a vol breakout strategy, what is that? That's a trending strategy. So instead of taking profits at 1R, 1.5R, 2R, you actually want to trail stop those, okay? So here's how you do that. Once this one takes off, you move your stop to break even once you hit it. And then once that one now you're down 1.5, 2R, you're in, you move your stop down here and you just trail this thing, right? And then we get to the lock limit days. So you've been short from 30.18, you're already down to 2,800, and your lock limit, and then the market opens, and I think oil gaps down 30-something%. They try to rally it hard down in here, but again, you're still in your stops are somewhere in here. Probably when they go lock limit, you're going to, lower your stop maybe down into this gap area here. Let's just say, so you've locked in, so that's 1, 2, you've locked in 3R during the craziest trading I've ever seen, ever. Okay. You're probably going to drop your now that we've made that successful attempt or unsuccessful attempt to come back up into here. You can squeeze a little bit more, maybe a 1/2 R into your profits. And this is when it really we get down, and now we're double bottoming, and now people are starting to have to deal with some stuff. And then that's when it gets tough. So now you lower your stop. You're probably going to be down. Let's just throw it here. 2,700. You're 300 points into this trade. And you've had another vol breakout, right? You've had how many vol breakouts? Another vol breakout, 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 big vol breakout. This is when you're saying, okay, this is when you look to, in a trending market, you want to add to your positions as they win. So the breakout strategy is a trending strategy. It's not a mean reverting strategy. Mean reverting strategies, you want to take profits off the table. A trending strategy is when you want to add to your positions as they're working. So you can use a pullback, but I use vol breakouts to add to my position. So you start with one contract, you add a contract all the way through, whatever method you're using to add to your positions. That's part of what this That's part of what our work is going to show us, is, you know, ways to add to it. And you can see, if we look at our distribution, we have some big winners, some 5R, some 4R, some 3R, a lot of 3Rs. And, you know, it's a positive expectancy. So a lot of really cool things that you can do with it once you know that the vol breakout strategy is the highest win rate strategy we have for a bear volatile market. So it's only a 2.99 SQN, meaning the quality of the strategy is the lowest of all trading regimes. Bear volatile regime, this is the worst trading environment for all of my strategies, and on purpose, because it's the yuckiest. It's horrible, and people do things that they normally wouldn't be doing in this environment. So, okay, so we're still in this trade. Now we're, you know, probably, so let's see if we can see. So that's, you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is a 14R winner. And if you've traded this right, just on one contract, that's 14R. So you're down 600 points, or you're up 600 points from your entry if you traded it as the vol breakout and you just let it breathe. The thing about bear volatile regime is you have massive up and down moves, right? So yes, these snapbacks from 2,700 to 2,880, that feels like we're V bottoming and we're going to rip to 5,000. I get it. But if you're in a bear volatile regime, you've already classified it as bear volatile. We already know what strategy works. So you don't need to try to catch the bottom, because it's irrelevant. That's not the strategy that works in a bear volatile. What works in a bear volatile is the vol breakout, trending, adding to your positions as they move in your direction. Your 14R, if you did it right, you've added, so let's say one contract, maybe to at least, let's call this 2. Let's say you added it here. And then the next big one. So let's just say your filter is a big, you know, greater than 2 or 3% bar. That's your signal bar. Let's just call that, because this is what we're going to work with him this week on, you know, the mentor program, moving him through that. So now you're on your third, you've added that. And so you're looking at what sort of quantitative ways would you add to your short positions in a bear volatile regime, or when you would be looking to take profits. The only way to take profits is your trail stopping. Okay. So now we have that big bounce on the 12th of March. This was a 4% up candle. The thing that we know about bear markets, and bear volatile especially, is in order to get into bear quiet, you have to move really hard. So let's say you've just locked in, where was it? I think it was, so this would have been right around here, would have been 14R. So that's 13, 12. So it's about 10 R's where your stop is here. Okay. You could have added here. Well, no, you can't, because that's not a vol breakout. So here we go. Let's see what the snapback does. No snapback. Okay. And then there's a potential reason to add to your short here if you were so emboldened. I would not. And there you go. Now you're stopped out here. You've locked in at 10. And what I can say right now is the bottom has been caught. And just by looking at it, as you see all these black bars here, all these down bars, it was obvious that it was just dumping and dumping and dumping. When you have big bars like this and they're staying consistent and more big bars are coming in, it's fine to take your profits there. If you've added 1, 2, 3, 4 contracts to get into this on your short side, you make an average. So that would be 10R on your first contract, probably somewhere around 2 to 3R, probably averaged about 4 to 6, 7R on your strategy. And you've sat through The first 2 trading weeks of March, very profitable, just watching. And now we're going to limit down again. So we're still bear volatile. It's obvious, but we've been pulled out of the trade. Okay. So we get that one. Okay. No fill. Another attempt. No fill. Another down. Okay. You could have, this one could have been filled, and you would have got stopped out if you took that one. March 17th. So down 1R on that one. So 1 win, 1 loss. 1 winner was, let's call it 7R with added positions. 1 loss is 1R, and that was a losing position. So let me just annotate that on my screen here. So we're playing along. Okay. And you might have tried this one here and another 1R stop out. Let's not say you might have. Let's just do it. Okay, so there. Yeah, let's call that a 1.5R stop out. You see why these are horrible. The trading this market is just tough, right? Okay, we have another one here. So we got filled 8 o'clock on the 18th of March. Sell stop below that one. It's a valid VBO. And another stop out. So spelling out. So you see, it's now death by 1,000 cuts. This is why it's a low. This is the worst market regime to trade, even when you have a great strategy. It's the toughest one to trade. And now, if I recall, we're back to, it's pretty obvious we're out of bear volatile. And, you know, looking back at the way this is trading here, this is bear quiet, right? It's bouncing around. Now we are able to start looking at failed vol breakout longs, because we can classify it as a bull or a bear quiet regime. So now we can start looking at vol breakouts to the upside and failed vol breakouts on the downside. You can also do failed vol breakouts from the upside to the downside. So you're not going to be doing vol breakouts to the downside. You're only going to be doing them to the upside, and you're using the failed vol breakouts both long and short. So now we have that. We figured out we're in a bear quiet. So let's see what we got here. We have a vol breakout to the long side here. So a buy stop above that, and let's see what we get. Stopped out, but we also had a the other trade is the failed vol breakout. And you can see the failed vol breakouts tend to work a lot better than vol breakouts. So another strategy, and this is something he's going to work through this week as well, is doing failed vol breakouts only, as he did vol breakout shorts only, failed vol breakouts only in bear quiet, because similarly to a bull quiet, or to all these regimes, they all work. Okay, you now have a vol breakout, not tradable. Oh, that wasn't a vol breakout because the compressed vol was up here. So this is, now we're in back to it, sorry. We stopped out here. We had a failed vol breakout. Because we're in a bear quiet, you can trade these failed vol breakouts and you would have gotten your exit here, or you would have stopped out there. Either way, on the long, it might have been some transition. All that is to say, trading these suck. Okay, nothing to do here. Now, this is the most expanded vol range ever, 2090 to 25. It's a 500-point Bollinger Band range. So trading that is a really tough. There's nothing there. You might have been excited and aggressive and take that vol breakout to the downside, not me. See how quickly the compression comes back in here. And so what you can see is we have compressed vol, expanded vol. So we got into bear quiet or bear volatile again for about a day, because you go from 2,500 down to 2,100 in about a day's time. That's a bear volatile, but that's also capitulative type move, because then you have a 5.5% candle. Now we have our compressed vol with the Bollinger Bands inside the Keltners. And we're moving back into, with that compressed vol, it's telling us we're in a bear quiet again. So we're looking at possibly vol breakouts to the upside, failed vol breakouts both upside and downside, not vol breakouts to the downside. That wasn't a compressed vol trade here. So this failed vol breakout was not a valid trade. Nor was that. That's not a failed vol breakout. That's a failed breakout, but you're shorting. Now, look at that slope. We're in a bear quiet and bulls have it. So if you're just price actioning this, you can say, yeah, let's follow that trend. Or if you're like me, you do nothing, because the risk is a little too high still. The ranges are insane. There's not much to do. So now we're compressed vol. Now we've got a vol breakout potential. So you could potentially be looking to short that one. No fill. Again, the next one. And there it goes. You got your failed vol breakout off this one. Sell stop below it to the midline. Take your profits. Here's our, here, let's add that one there. Because that one, yeah, I think I scored that one. Yes. So, okay. So then we've got failed vol breakout. That's a plus 1.2 R. Just keep bringing that in so we can keep our scorecard. This is just the month based on what we know. Now, again, this is me. This is doing a back test, right? This is me going through and doing a back test. This is not how I traded it, or this is what I should do, blah, blah, blah. This is what a back test looks like, okay? So you can find things that work. Now, we've done the back test here in 2008. So we go to 2020 and we apply what we know from the bear volatile regime. Bear volatile regime, the only thing we're going to be doing is we're shorting with the VBO strategy, and we're adding to our positions in order to improve our SQN. And we're trying it in a different, so now we're back into we've moved from bear volatile to bear quiet. This is bear quiet. So we can trade failed vol breakouts in bear quiet. We got one successful trade. Yeah, that's potential. Didn't fill. Maybe one bar. I'm not going to take that anymore. So no failed vol breakout there. You see why it canceled. So it was a compressed vol here. We got the expanded vol close outside it. So it would have been a sell stop below here. And then I would have given it one more as a short. Didn't work. You could have taken the vol breakout to the long side, which is a strategy. That's something to back test. In either case, it wasn't easy. Now we're getting back to some compressed vol, so we may have a trade setting up here. Okay, so you have compressed vol, closed outside. You would have put a buy stop above that, no fill. Move to the next candle, see if you get filled. You get filled here. So let's just take that trade. Do you guys have any questions while I'm going through this stuff? Throw them in the chat. Otherwise, I'm just going to keep walking through. So that's a fill here on this one. Okay, so on this signal, you got long. So that's a pretty good risk range there. You're up 1R. Let's call it, that's 1R. Let's call it 1.2R to the midline. You're exiting. The other thing you can do now that you understand the trend in a bear quiet is that you're going to, maybe you just take long. An interesting thing. So in this one, this could turn into something. And unlike other regimes, when you're trading the FVBO, did I call that 1 point? Yeah, I think we called it to the midline. Yeah, it's 1.2. Now I'm just eyeballing this. This isn't the very formal way of doing it. What I did is I created my training data. I went and did this. So I trained my strategy, and now I'm testing it on a different market, different time, 12 years later, and see how it performs. Pressed vol, we got a potential, no fill. Pressed vol. Okay, we got a potential here. So we're going to take this trade here. Long. Remember when I said, when I first started, that I was just going to mess with currencies, but for some reason we ended up doing this. Okay, so it looks like there was a fill. Did that go? Is that a fill, actually? 25.49.75. Oh, no, there was no fill. Okay, so we move it to the next candle. So this is our new setup. 25.47.25. Nope, no fill on that one either. All right, we're done. We cancel that trade because that's too many candles. It didn't go, and it didn't fill. It didn't fill. There was no fill there, and we start to head down. So nothing to do here. I believe we moved into bear volatile quantitatively on the daily, so you could have taken the failed vol or the vol breakout there, but looking at it, it doesn't look like we're in a bear quiet or bear volatile. We're still in bear quiet, so no rush there. No trade there. Now we're looking, now this is starting to look a lot more like a bear volatile or a potential bottom. So heads on a swivel. We're not getting too aggressive here. Let's see, we stay within that compressed range. And that brings us up to about where we are right now. So we got a vol breakout. You can look at the vol breakout going long last night, or attempt a filled vol breakout trade, which would not have filled ever. So you never would have been in this trade unless you decided to start doing vol breakouts to the upside. And you would have gotten very lucky. But for the most part, you know, I don't call that a winner. So let's go back and let's keep score here. Trading March. So that's a total of, so trading for the month of March, this bear volatile and bear quiet regime would have been a total of 5.5R if you'd have just traded on the hourly. And had you only traded the failed vol breakouts, probably would have been about a 3R, 2 to 3R a month. So that's why it's the toughest regime to trade. I did 2 trades. And I spent the rest of my time doing a bunch of other things. And I made, I think, 1.2 to 1.5 R on one trade. And I just know because that this is the bear volatile regime is the worst performing regime of all the trading regimes out there. Yes. So it's the worst performing on all things. So Chris Neely asked, do you apply the strategy to 5-minute charts? Chris, it works on 1 minute, 3 minute, 5 minute, 10, 15, 20, 30, 60, 240, 1 hour, you know, 6 hour, 12 hour. It works on all time frames. Okay. So I just enjoy, and I know that the lower time frame in a bear volatile, these are some other things to, these are some other things to understand about bear volatile. Bear volatile, lower time frames work better. So it's a good route to go. It's a good route to go to find if you have, you know, you want to trade a little bit more. The bear volatile regime is a great regime, as is bull volatile regime, to day trade on a lower time frame. Actually, bull volatile isn't as good. But if you're looking to, if you're sort of person that is drawn into, and most new traders are drawn into this high volatility market trading because you don't understand position sizing and risk levels. You see a 10% move and you think, oh, I can just load up on 20 or one contract and make as much as I could in 3 months. And you don't understand that you're actually risking 5, 8, 12% instead of the normal 1%. So, but that's why a lot of people are drawn into these high volatile regimes. What I know is that it's the worst performing regime for me. And there's so much chaos and drama during a bear volatile regime. So I don't trade them. And I have the statistics here, not just here. This was an independent trader. This is one of my mentees. He's in the Trading Thunderdome mentorship program. And he is doing this on his own to validate. And what's great about it is I have my statistics on it too, and they match up. Okay. So, sorry, my internet at my new work location sucks. A few minutes ago, you said too many candles with no fill, so give up. Okay. So on a failed vol breakout, what you're going to see is, so you see, you have that. I think this is probably where it happened, or here's where it happened. You see, we got that vol breakout, the close up there, and you would have put your sell stop below here. And then no fill on the next one. Usually it's about 2 candles to where you realize that, okay, this is trending. It's not mean reverting. Not always, but when you get a setup like this one here, well, that was compressed vol, expanded vol, put your sell stop there, put your sell stop there, no fill. Usually in about 2 candles, 2 inside candles, or 2 smaller candles after the big one, you know that it's done and it's outside the range, not worth doing. That happened here. You can stick with them as long as you want. It's up to you. The work I've done shows, and here it happened again, inside candle, no fill, inside candle or tight candle, no fill, cancel it. And because it's already moved higher. So it's already moved into a vol breakout type regime. And you know, that's the other way to trade them. All right. I think that's it for me today. Unless you guys got any more questions, drop them in there. I'll respond. If not, I'm gonna get going on far more interesting things than day trading. For me, there's nothing going on right now. Actually, we can take a look at Bitcoin. So this is a really interesting one. See how compressed that volatility was? Blam. What are we looking at on? And here we are. We are in a neutral regime. Bottom's been put in. This thing telling me on Bitcoin, this thing's telling me that we're pretty much done. We flushed everybody out. We've killed all hope. A lot of people bought this and sold up in here, and now what's going to happen, thinking that they, thinking they nailed it. And I know somebody who, he bought about $500,000 down in this area, and no, down in this area, down around the 4,000 area, and walked away and just said, whatever, I'm gonna hodl and I don't care. And he walked away, and then he came back and he doubled his money like a week later, and he sold. I know a lot of people that did that. And what that means is these shorts got short, and they're still feeling okay because they might have shorted 10,000. A lot of people shorted 10,000, 9,000 area, right? So this little area here, a lot of people, it's where we would be looking at 8,500 is likely where the majority of shorts are, and 10. So if we break that 80, we're going to move to 8,500. I have no doubt about that. Shorts are probably going to have their stops in here at probably over 9,000, because they feel if it goes to 9,000, it's probably going to do that 10,000. So they're going to have, shorts are going to be in this area here. So we're going to, like a magnet, chase that and draw them up here. And what's going to happen is the bulls who bought this and sold this, they're going to have to chase once it happens. Shorts are going to have to cover, and we could exciting. I'm thinking 11.6, 11.8, somewhere on that area. Any questions, guys? Anything else? If not, I am out of here. I got far more fun things to do. I got to work out. I got a bunch of emails. I got a bunch of phone calls today. Going to be a great day. You can respond to the email if you got it from the email. If you have any questions, you can tweet at me, Critty Macro, comment in YouTube, anything you guys want. Let's chat it out. That's about it for me, y'all. Have a fantastic day.